Us now is Richard Bernstein from Richard Bernstein Advisors. Great to see you, Rich. And I'm wondering what your take is on we're being buffeted by concerns about geopolitical and then inflation. For you, what's the bigger concern in the market here?
So Melissa, great to be with you. I think, look, I'm not an expert on geopolitics. You have people on the past hour that know an awful lot more than I do on that front. I will say that if you put everything together that's going on right now, whether it's geopolitics, whether it's the labor market, whether it's supply disruptions, no matter what you look at, everything is pointing to inflation being front and center. And I think that is the most important theme that investors should be focusing on right now is what is secular inflation going to be going forward? And I think everything points to that right now.
Rich, it's Sarah. You've been on the show in the past few weeks sort of warning about bubbles in the market, crypto, SPACs, IPOs. If they were bubbles, a lot of them have popped. We've seen some really dramatic selling, especially in these high growth names, and it keeps coming. How far along are we, do you think, in this process?
So, Sarah, you know, it's funny you asked that question. That my colleague Dan Suzuki, who you know well, came out today with a little comment that pointed out in the tech bubble, tech and telecom reached all the way up to 41% of the S&P 500, and it fell from 41% of the weight all the way down to about 16. This time, it's gone from 40 to 38. So that would argue if we're anything close to where we were in post-2000, we're in the very early stages of this bear market. And I think that when you have major leadership that people are really in love with and it starts to underperform, everybody starts trying to pick the bottom, right? We all try to catch falling knives. And you know, not to be overly glib, but the time to catch the falling knife is when nobody's talking about it anymore, when nobody cares. And that's clearly not the story yet.
Richard, you say that investors are underweight inflation, that they're positioned for an environment that's more like pre-pandemic. So what is underweight here in investor portfolios? Is it materials? Is it energy? What?
Yeah, so Melissa, it's a broad range of what I like to call pro-inflation assets. So in the equity market, that would be energy, that would be materials, that would be industrials. It would be some financials, high-yield bonds, because remember, it's harder to go bankrupt when you have inflation. Commodities, commodity-related emerging markets, gold, real assets. Of course, when you start talking about real estate, you have to be a little bit careful because some of that's overbuilt. But if you take all those together and you put them together, you would find that pensions, endowments, foundations, family offices, everybody is underweight pro-inflation assets in total.